Now the next topic is a basis of assessment. Now, as I told you in the start of the lecture in the trading income's basis of assessment, that there are different type of basis of assessment in different scenario, in different cases. One we discussed is this is called current year basis, and this is called assessment of the tax adjusted trading profit in ongoing years. Okay, when the business is in continuity, the trader is in business for many number of years. And the second most important and I think most technical area in the trading income basis assessment is assessment in opening years. When the trader starts its business, the trader commenced his business and prepare his first set of account for the first period of account. Very first time the trader is preparing accounts and calculate his tax adjusted trading profit for the first period of account. Then in this case, the trading income assessment is very tricky and very different from ongoing year rule. And the last is closing year rule. When the trader ceased the business and prepare and calculate tax adjusted trading profit in the final period of account, then how this final period of accounts profit assessed, this is called closing year rule. It is very straightforward. And as far as the assessment in ongoing year rule is concerned, it's very straightforward. As I told you before, you have to observe the ending date of the period of account and see in which tax year the ending date of this period of account falls, and the full profit is assessed in that particular tax year. The next area is opening assessment in opening year, and the assessment in opening year, which is called first year of trading, the individual prepare accounts for his first period of account. So the profit of the business which is earned in the first year of trade is called the profit for first period of account. So please remember, this term is regularly used in the topic first period of account, second period of account. Okay, so this is the period for which the sole trader or trader made his or her accounts. Now, if this is the case in the question, when these words are, you see in the question that Mr. Ahmed started business, commenced business, Mr. John commenced business, start business. So you have to consider the opening year rule and apply the opening year rule to find out the assessable trading income in the first period of account. Now, first of all, before applying the rules, you have to find out, you have to identify the length of the first period of account. That is, maybe the length of first period of account is more than or equal to 12 months or less than 12 months. The primary objective is to identify the length of the period of account. It is maybe equals to or more than 12 months, or it may be less than 12 months. This is the primary test we have to apply in every opening year rule question. Okay, so when you identify that the first period of account equals or more than 12 months, then there are two cases that we observe in the examination question scenario. For the purpose of simplicity, I mentioned these cases with these names: case 1, case 2. Now, what is mean by case 1? If you see that the starting and ending dates of the first period of account are in different tax year, if the first period of account is equals to or more than 12 months, and you see that the starting and ending dates falls in different tax year, then this is case 1. And in front of you on the slide, there is an example how we identify that. You see the starting date is July 2015 and it is in tax year 15-16, and the ending date is June and it is in tax year 16-17. So this confirms that the length of the period of account is 12 months and the first starting and ending date are in different tax year. And in the second, we are not concerned when we apply opening year rule. We just see the first period of account, and then similarly the second period of account is as normal. The business decided to prepare accounts to 30th June each year. But if the length of the first period of account is equals to or more than 12 months, then the case 2 says that the starting and ending dates of first period of account are such that a full tax year is skipped. A full tax year is skipped. Now, how this happens that the trader started business on 1st January and decided to prepare accounts every year on 30th April and prepare his first period of account to 30th April. So you see that this is the period of account is for 16 months. The starting date is in 15/16 and the ending date is at 17/18. Now what happens here? The tax year 16/17 is skipped. The tax year 16/17 is skipped, and this is the case 2. Okay. So first of all, identify the length of the period of account. Then identify with the help of starting and ending dates whether in which tax years they are fall. If they are fall in different tax year, this is case 1. Refer to case 1. And if these are fall so that starting and end date, a full tax year is skipped, this is referred to as case 2. So the name of these cases are just for the remembrance, just for the easiness. Otherwise, these names are not identified in the case law or Finance Act. Okay. The next is if the first period of account, the length of the first period of account is less than 12 months, then again there is 2 cases further, named as case 3 and case 4. In case 3, it mentions that the starting and ending dates of first period of account are in again different tax year. Please don't mix this with case 1, because in case 1, the length of the period of account is equals to or more than 12 months. And in case 3, the length of the first period of account is less than 12 months and the starting and ending dates are in different tax year. Now, in front of you, the example is quoted that the business started on 1st July 2016 and the trader decided to prepare accounts on every 31st May every year and decided to make the first period of account from July to May, and it is of for 11 months. This is for 11 months. So the first period of account is less than 12 months and the starting date is in tax year 16/17 and the ending date is in 17/18. So this satisfied that there is a case 3. Why we are classifying into cases? Because every case has a different opening year rule to be applied. So for this purpose, we have to identify the length of the period of account, then identify the case, and then apply the rules according to the cases, which I will tell you in the next slides. And if the first period of account is less than 12 months, then the case 4 says the starting and ending dates are in same tax year. As you see in the example, traders start business on June and decided to prepare accounts every year at 28th February. So 1st June 2016, it is in tax year 16/17 and the ending date is also in 16/17. So the case 4 says the starting and ending date in same tax year and the length of the period of account is less than 12 months. And if you count the months, this is all about the game of months. You have to be very careful in the counting the months and taking the dates into the relevant tax year, so that I told you the opening year rules are the technical area of basis of assessment in trading income. So how many months are there in this period? 9 months. Okay. So there are 9 months, less than 12 months, and starting and ending date are in same tax year. So it's satisfied that this is a case 4. So now when we identify the length of the period of account and identify the cases, then we are in a position to apply the opening year rule, which are identified by the law, which are described by the law for different cases. Okay. Are you understand the cases? It takes some time to remember. I can understand, because these are, I told you, little bit tricky area of the trading income basis of assessment. Okay. So first of all, you have to grab the concept at the moment and then practice the questions by applying these rules. And then you are very well familiar with that and your grip is very good on that topic. Now I'm starting the basis period. Now I'm applying the basis period to these cases. Now, first of all, identify again, I'm repeating again and again. First of all, identify the length of the period of account, then identify the case. So if the case 1 means starting and ending date of the first period of account are in different tax year. Now, what is the rule to find out the basis period under case 1? Now, please I'm pointing out the basis period starting point and basis period ending point. In every rule, the basis period starting point and basis period ending point. These are the rules that you have to apply on all cases. If you identified this is a case 1, any information given in the question, what type of question you want to solve, you can solve by this rules very easily. Now the starting point is the date of the start of the business and the 5th of April next. 5th of April next. Okay. Now if I apply this rule to my given information of case 1, like start of business is 1st July 2015, right here, 1st July 2015, and ends it at 5th of April next. Now, what is the 5th of April next? This is 5th of April 2016. If you apply the rule, the starting point is the start of business, July 2015, and ending point is the 5th of April next. Now, this you count, there are 9 months. So when you apply the opening year rule in the case 1, on the first period of account, you made a basis period of 9 months. Okay, you just allocate the profit of first period of account in case 1, which is 25,500. So these 9 months are in these 9 months are in these 12 months of first period of account. So how you apportion the profit to 9 months? 25,500 divided by 12 multiplied by 9. This comes 19,125. The allocated profit are 19,125, and these are assessed in tax year 15-16. So it means that the profits of first period of account are assessed in 15-16 of 19,125. Now we apply the rule of second basis period in case 1. The starting point says that end of first period of account. Please remember, not first tax year, first period of account less 12 months. You have to go back. You have to go back 12 months from the end of the first period of account. In our example, the first period of account ends at 30th June 2016. 30th June 2016. So when you go back 12 months back, the date comes 1st July 2015 and ends at 30th June 2016 because end of first period of account. The second basis period says that the starting point is end of first period of account less 12 months and ending point is end of first period of account. So if you see that, if you observe that these are exact the 12 months of the first period of account and the profits are assessed 25,500 whole and ending date is on 16/17, and the third basis period is same as second period of account, and the second period of account is in our example is from 1st July 2016 to 30th June 2017, and profits are assessed in 17/18 and whole amount is assessed in 17/18, which is 32,000. So when I apply the opening year rules, and find the basis period, there are profits of 15-16 assessable, 16-17 and 17-18 are find out by applying these rules. So as you see that in this case, the profits of 25,500 are assessed 19,125 assessed in 15-16, and then again these 19,125 assessed in 16-17 again, because we apportion these 25,500 in 15-16 and then take again this 25,500 in 16-17. So now the same period of account profits are assessed in 2 tax years, and these are called overlap profits. These are called overlap profits. These are profits of those months which are assessed in more than one tax year. These are assessed in more than one tax year. So these are called overlap profit. And in our example, these are 19,125. Okay. So when you apply the opening year rules, you have find some overlap profit, and in the examination question, maybe in the form of MCQs, in an OT case, the examiner asks to find out overlap profit. Okay. So I give you an idea by solving this example in front of you, that how you apply the rule and how you find out the overlap profit. And you have to do this practice in every opening year rule question in case by case. Okay. First of all, identify the length of period, then identify the case, and then apply the rule and allocate or apportion the profits and find out any overlap profits. As I said that initially it looks tricky, but with the practice you will very well familiar with this. Okay, now we come to the case 2. What about case 2? Case 2 says that starting and ending dates of first period of account are such that a full tax year is skipped, and we observe in the given example that it was happened, that the full tax year is skipped. Now, in the case 2, what are the rules? The first basis period is same in the case 1, start of business, and 5th of April next. And now in our example of case 2, the business starts from January 16. The business starts from January 16. The business starts from, I write just here, January 16 and ends at 30th April 17. So for the sake of easiness, I write the information here. So what is the start of business? Start of business is January 16, and then it says 5th of April next. So in this case, the 5th of April comes very near after 1st January, and this gives answer of 3 months, and the profit is assessed in 15/16. What is the amount? I have to apportion the profit. Now the 16,000 profit is for 16 months. 16,000 profit is for 16 months. So how much is the profit allocated to this 3 months? Is 3,000, because the profit for 1 month is 1,000 and for 3 months it is 3,000. Now the second basis period rule says that starting point 6th of April, 5th of April 16, starting point 6th of April 16, ending point after this 5th of April, the profit assessed on 16/17. As the profits for 16 months are 16,000, the profit for 12 months allocated is 12,000. So as you see that the tax year 16/17 was skipped, but by applying these rules, HMRC include this year and assess the profit from 16,000. The 12,000 is assessed in 16/17. And as far as the third basis period is concerned, the starting point and ending point is, starting point says end of first period of account less 12 months. Now end of first period of account, the first period of account is ending at 30th April 2017. So it should be start from 1st May 2016 and then end of first period of account. The first period of account ends at 30th April 2017. The length of the basis period is 12 months. The profits are assessed in 17/18, and again the 12,000 profits are assessed because the 16 months profit is 16,000 per month, 1,000, and 12 months profit are 12,000. So if you see that the total profits earned in the first period of account by the individual is 16,000, and the individual is paying tax on these 16,000 profits, 3,000, 12,000, and 12,000, means the individual is paying tax on 27,000 profit. So earning 16,000 profit and paying tax in different tax year on total profits of 27,000. So now in this case, the overlap profit is 11,000. In initial years, the individual have to pay the tax on these overlap profits, but the individual attracts some type of relief on these overlap profits, but it is in the closing year. And same as second period of account, and the second period of account is from 1st May 2007 to 30th April 2018, tax year 18/19, and the profit in this year is 24,000. So the full 24,000 is assessed. So this is the rule to find out the basis period in case of case 2. There are overlap profits of 11,000. So when you apply opening year rules, there are some overlap profits in every case. Okay. Now comes to case 3. The case 3 says that the starting and ending dates of the first period of account are in different tax year and the length of the period of account is less than 12 months as in our example. The case 3 is the starting date is from 1st July 2016. 1st July 2016 and it ends the period in 31st May 2017 and the profit is in the example is 22,000 for 11 months. 22,000 for 11 months. Okay. Now this is the case 3. The starting and ending date are in different tax year and the length of period of account is less than 12 months. So how we apply the basis period and find the basis period? The case 1, the first basis period in every case, as you see, is same. Starting point, the start of business. This is July 2016. Ending point, 5th of April next. This is 5th April 17. And there are 9 months. And the profits are assessed in 16-17. And the amount of profit allocated are, if the 22,000 profits are of 11 months, 1 month profit is 2,000 and total profit assessed is 18,000 in tax year 16-17. Okay. By applying the basis period rule, opening year rule in case 3, I have identified that out of 22,000, 11 months profit, 9 months profit assessed in 16-17 and it is 18,000. Okay. Now, in this example, what is the second period of account? The second period of account is from July to May 18 and profit is 18,000. The second period of account, July, I think June 17, from June 17 to May 2018, it is of 12 months and the profit is 48,000. Now please see carefully in the second basis period. Again, starting point, start of business, which is 1st July 2016 again, and 12 months after the start of business. Now in this case, ending point, you have to go further. You go forward 12 months from the start of business. So now in this case, from 1st July 2016, it comes 30th June 2017. These are 12 months and the tax year is 17-18. Now in this case, the apportionment is very important because as you see that from these 12 months, 11 months are fully of first period of account. So the full profit of 22,000 is taken here and 1 month is required from this second period of account to make the basis period of 12 months. So how you apportion? You add 48,000 divided by 12 multiplied by 1. You just need 1 month profit from this 48,000 to make the basis period of 12 because 11 months of first period of account are same and then 1 month from the second. So now what is the total amount of assessable profit of this basis period in the tax year 17-18? 28,000. 22,000 plus 6,000. Okay. So the 28,000 profit is assessed in the tax year 17-18 when I apply the rule and find out the second basis period. And as far as the third basis period is concerned, it is same as second period of account. So please remember that in the case 3, the second basis period time apportionment is very important. You have to take full months of the first period of account and then the remaining to complete the 12 months from the second period of account. And then in this case, as you see that from this 22,000, 18,000 profits are assessed in 16-17 and these 18,000 are again, these 18,000 profit are assessed again in 17-18. So as far as the overlap profit is concerned, one is 18,000 plus the 4,000 which assessed in the tax year 17-18 and same 4,000 profit assessed in 18-19. So the overlap profit in this case are 22,000 pounds. These overlap profits attract relief, but in the final period of account. Now the case 4 and the last case in the opening year rules is that the first basis period, as you see, the first basis period in every case is same, start of business up to 5th of April next. And as far as our example of case 4 is concerned, it from June 16 to February 17. June 16 to February 17. And it is of 9 months, profit 18,000. 9 months, profit is 18,000. And the second period, for the sake of the second period in case 4, from March 17 to February 18. March 17 to February 18. And the profit is of the second period of account is 60,000. Okay. 60,000. Now the rule says that start of business 1st June 2016, then 5th of April next. It is for 17, tax year 16-17, no profit allocation. When you count these months of the first basis period, there are 10 months. The 9 months are same of the first period of account. The profit is 18,000. Plus you have to take 1 month from this second period of account, 60,000 divided by 12 multiplied by 1. It gives us answer 5,000. So the total profit assessed is 23,000 in the tax year 16-17. And the second basis period says same as second period of account, and the profit is 60,000 assessed in 17-18. Now how much of overlap profit is there? The 18,000 profit of this period are assessed here, and 5,000, so only overlap profit in this case are 5,000 pounds. Okay, because 5,000 pound profits are assessed in 16-17, and again these 5,000 pounds profit are assessed in 17-18. So these are the 4 cases, and there are 4 different rules you have to apply in opening year of a trade. So please remember, not use these rules when the individual is in the question. The examiner says the individual is in business for number of years, individual is in business for many years, so in this case ongoing year rules are applied. But if the wording of the questions are that started business, commenced business, then you have to apply these rules and calculate the assessable trading incomes for every year. And if the examiner requires, you have to find out any overlap profit. As I discussed with the overlap profit, there is no need to read these lines, so you read at your own. But I hope so you have understand what are overlap profits. Now the closing year rule, this is very straightforward. That simply says that the closing period of account is closing basis period. Whatever the closing period of account, it is of maybe of 12 months, maybe of 8 months, maybe of 10 months. So this period of account is the closing basis period. So how the profits in the closing year is assessed? For example, this is the last period of account, and there is the second last period of account from January 2017 to December 2017. The tax adjusted trading profit is 100. Made example simple, say 50,000. The last period is from January 2018 to 30th June 2018 of 6 months. And the profit is 45,000. And in the question, it was mentioned that there are overlap profits from the start of the year when opening rules are applied of 10,000. Now, how these profits are assessed? The last period of account is the last for closing basis period, you see just the ending date of the last period of account falls in which tax year. In our example, it is in 1819. The profit of 45,000 minus overlap profit is assessed in the final period of account. So as I told you that in every case in opening year, the overlap profits are arrived. So these overlap profits are relieved in the last period of account, in the closing period. By how? You deduct the overlap profit. So 1819 profit is calculated by using this formula, 45,000 minus 10,000. The profit assessed is 35,000 in the last period, and this profit is assessed in 17, 18 in full, 50,000. So the closing year rule is very straightforward. The last period of account is the last basis period. You have to identify the ending date of that period of account and observe that the ending date falls in which tax year, and the last period of account tax adjusted trading profit, deduct any overlap profit which arise by applying the opening year rule, and then the final answer is assessable trading income in the closing year. So the closing year rule is very straightforward. Ongoing year rule is very straightforward. Opening year rule is basically divided into cases, and then each and every case has a separate rule to calculate the assessable income in the opening year, which is very tricky, but this is not so much difficult. When you make practice from these rules are very straightforward, and you can apply these rules in any kind of question, and you find the overlap profit and as well as your assessable trading income. Okay, closing year rules are very straightforward, but in the examination there is a case, maybe in closing year rule, maybe I try to make example here. This is the second last period of account, and there is a last period of account, and there are some overlap profits of 15,000. The second last period of account is from July 2016 to 30th June 2017. The profit is 1,60,000. And then from July 2017 to 30th April 2017, maybe this is the case, and the profit is 100,000. Now, as you see in front of your screen on the slide, I made an example. Maybe it appeared in front of you in an examination question. Now, if you see the ending date of the second last period of account, which is 30th June 2017, it comes in the tax year 17-18. And as you observe the last period of account ending date, which is 30th April 17, it again comes in the tax year 17-18. Okay, so what happened here? The second last period of account profits, which is 1,60,000, and the last period of account profit, which are 1 lakh, these both profits are assessed in same tax year, which is 17-18. So you add up both profits, and right here 2,60,000 profit is assessed in 17-18 by deducting 15,000 overlap profit, and this is the final answer. That this is the assessable trading income in the final period of account, and both dates are come in the one tax year. You add up the profits of both period of accounts because the dates are in same tax year and less the overlap profit, and gives the answer to the examiner that this is the final assessment on the trader in the last period of account. Okay, so maybe this type of trick is used by the examiner in the closing year. Otherwise, the closing year rule are very straightforward. Okay, now this is all about basis of assessment.